Good evening. This is the Elliott Wave update for the S&P 500 and the NASDAQ 100 for Sunday, April 2nd, 2023. As Globex opens, actually it's been open for 2 hours, but as it continues to trade, it is holding lower levels, and right at the moment, the NASDAQ and the S&P are beginning to make session lows thus far. I want to go and now just last night on the big picture update, I swung around and I put up a new count, which was an alternate count. But I feel that Friday's activity and combined with the week presented a pretty compelling picture in terms of what the very short-term frame time might begin to look like. And I presented an alternate count, which likely will get shifted over, and where the primary A wave I had marked as being complete here at this level. So at the October low would have been the primary A, and that I presented on yesterday's big picture update. So tonight, just in a regular Elliott Wave update, I'm going to shift and show an additional alternate count that was actually brought forward by one of the subscribers to the YouTube channel, and presented it there. And I'd had it in the back and then brought it forward, filled in what the commenter had actually laid out for me, and went, okay, worthy enough that I'm going to present it right now because it becomes the alternate, so to speak. So they're running in pretty strong comparison. And it does present, when you label it and frame it, a pretty compelling argument for what is happening right now. So again, I'm on the daily, and we can take it up to the weekly chart to get even a better look. And let me just take this away so we can just see the move itself. So again, these are the levels that I'm going to go because they're the ones that are showing up on the daily. And otherwise, we're going down to the 3502 low to put that in versus where it was basis the June contract. It's up a little bit higher. So either way, we're going to get the same look. So whether I'm starting here, I would bring this down and go from here, or from the June contract. So I'm going to use it on the June contract because that's actually the one we're trading at the moment. But the triangle itself remains the same. So from the primary A wave, what I've done is put an intermediate. So what we are in is a primary B wave. So it's a big move. It's a big move. And in fact, instead of being enforced since October lows, I will say and go out on the limb and say, this has been in the making since the June lows. Now, what has been confusing is why the market continues to recover and not just continues to go lower. Well, here you go. It has been in what Elliott would call a triangle pattern, and it's on a very large degree. So that brought a lot of additional probability scale to rise a little bit that this could definitely be what's in play right now. Now, if it is, what we'd be looking at is an intermediate A, B, C, D, and now it's finishing up the E. And you can tell by the triangle nature of it that it's going to meet its resistance to complete at about 4180 to 4200. Now, often within an E wave, and again, on the degree that this is, an overthrow would be very likely. Not something that would come out of the ordinary if it broke with a fairly good surge above 4182, which is where the trend line for the triangle is right now. So I'm going to bring it back down to that daily, and we're just going to talk now for tomorrow. Again, market's a little bit lower. They're continuing to trade it lower. The Asian markets are now open, and now they're contributing their voice or what maybe they had ready to do. So in other words, we're looking for a small pullback after last week's tremendous rallies. Tremendous in several ways, folks, just in the fact that what they did in the face of what we know as being real. But the levels that they reach and that they would grab at the precision that JP Morgan traders put together that roll. It was done with, I as a trader, full kudos to those traders at JP Morgan for pulling off what they did and have continued now to do for several quarters. And it's a very large roll of a collar. What in the market it would be defined as a collar, and what they're doing is they're collaring risk. They're putting a limit on the downside and the upside risk that they're willing to take to hold this position or to manage this position as it changes. And so it's a hedge fund that within JP Morgan. And it was done beautifully, stealthily, completely, and just done. And it was beautiful to see in terms of it as I'm a trader. So with that now out of the way, I would suspect that this triangle gets even bigger emphasis, because what was really holding the markets up was that they needed to do this roll. So things maybe had to be at a particular level, at a particular price, so they could put it together and actually get it executed. And yeah, it was just amazing. But that provided upside. The fact that it was a quarterly expiration provided upside pressure to get position squared, to get everything rotated to where all of the hedge fund managers and the everybody who manages money, basically, they had to be reflective of what the market was doing, and therefore they had to participate and do what they did. Now, having said all of that, if we still have upside, the market has defined that it could be within some parameters, if indeed it is the triangle. So what we want to take a look at is what would we put together for a D wave. So I'm going to continue to use extensions, and let's put it out there again at the bottom of the B wave to the top of the C wave to the bottom of the D wave again. Now 382, which would not be uncommon, but because of the degree, I'm going to take it up to the 50. The 50 comes in right now 41.75. And then we have the trend line, again, on basis the daily chart at about 41.90. So now we're building this area where we have 41.75 to 41.80. And then we have 41.93. And then it breaks. If we get a good thrust, we're going to be about 4,200, and therefore it goes to the next level, which is 4,250. But I'm sure we can have some points in between, because I can do another from there to there to there. And again, we're putting in a lot of definition to all these different moves coming to a head. 42.60 again, another one at 42.75. So now we've got a double of 42.75 up to 41.85. So now we got a $10 window here, and then it shifts up to 42.61, but we know we have 42.50, and then we have 42.30. So we have 30.50 up to 60 would be our next window, should they decide to push again. And this would all keep in context of a triangle pattern, and now declaring on the size that it would be on a primary degree, we would definitively be looking for the market to stop on a dime, turn, and just pretty much reject every level all the way back down. And so therefore, they're going to have a reason. And again, here we are hanging out here, and the first reason would be just being up this high against what we're seeing, against what we know, against maybe we get another big bang failure. That's all I can come up with. What's going to really rock and shock the market that they thought or believe has now been contained after 2 or 3 bank failures? Oh, all contained. It's like, whoa. And when we won't go there. In any case, I want to keep it technical, and that's a window. And yes, the numbers show that it could. And so again, under the triangle pattern, I truly wouldn't be looking for something quite this high. But this is an alternate. So going over to the NASDAQ, I've kept what I presented yesterday, which does allow. So again, switching the S&P back to this is going to produce a much larger rally, and then we are talking 43, 44, 45. When this changes back and that this is a C wave up, and that's a 1, 2, we're in the 3, we get a 4 and a 5, then we are looking up here. And it would be pretty much as intense as the push. So if anything, what we've done is 1, 2, 3, and maybe a little 4, and then we got a 5, which still would then have the potential to get up into here. The bottom clusters, that could still fit. And then we're still going to be looking for, because that in primary A would be down here. And then this would be A and a B, and we're in a C wave. Same deal. We're going to put the primary B, no matter where it ends, we're putting a primary B, and we're looking for something to kick this thing into gear and a primary C wave to begin. So no matter what the combination that I'm going to work with here, both would be calling for a turn and drop in the market. And as I've been talking about, and I continue to say, and as I will say again in this conversation, it will be news driven. Something will shock the market. And again, what exactly? Come on, folks. We all can go and look at the news. But right now, it's like, whatever you want to believe, I'm just trading the direction. But in the back of my mind, I'm like, beware. This direction can change and just blast a whole lot of people right out of the water very, very quickly, because it'd be like, what's going on? So again, that would be, the ES has that potential. And the moving averages continue to favor it. For right now, the moving averages favor continued upside. That I will say. And that S&P, let's bring it down to the hourly, they absolutely still favor upside. And this is just a small pullback after these tremendous rallies. So again, flipping over to the NASDAQ, and I will go right to that hourly chart. Got a little bit of a gap here, which was not to be unexpected. So that's a small gap. I think they might try to go back and fill it. We'll see. We'll see how this all settles out a little bit. But here, let me just start in the daily. Here's the count that I presented yesterday. So we're in a C wave up. There's 1, there's 2, and there's 3. But there's the triangle pattern. I did put in the boundaries. It's even tighter, and we'd have to consider that this might be over. Or one more little spring higher, 13,360, 13,540, somewhere in there, maybe a one last gas blast to 14,000. For what would be considered throw over of a triangle. Remember, the other one is different. A, B, C, D, and we're in that E wave. If the thrust goes here, for the size of the move, I would allow it. I'd be like, yeah, it makes sense. It's okay. And then, but a turn and an absolute knockdown, drag out, get out of the way. We're killing anything that steps in front of us, plow lower. So either or. But if these disappear and we're just working off of that, then these are the numbers for the completion of a third wave. Where 3 would equal 1 at 14,010. Most of the time, we'd be looking for wave 3 to be a little bit longer. Well, then we're pushing up into these levels. I don't know if the market is going to be able to sustain or mount that much energy, because the press last week should kind of be over. Again, being an expiration, we got to wait and see how it all rolls out. But I would expect that the movement of cash has now been done. And now what do we have? Earnings. We go into earnings. So we're going to sit and churn and do nothing until earnings? Very possible. So again, tomorrow, I'd be looking for continued upside. Get this all done, wrap it up neatly, and then let's see what they want to do. Because we got a 1, 2, maybe a 3, or we've got a triangle. The benefit of the triangle, folks, is when it's done, it should thrust out of the triangle and come back the width of the triangle. Blast out, come back and go the entire width of the triangle. So that's all the way back down. All right, I am going to leave it right there. Our next update will be on Monday, April the 3rd.